Yeah, send the moon Arabic pension. The rest of me is I need calling, but I'll be coming tomorrow. Thank you. Bye. Sorry for interruption. Hello, hello.
Hello, sir.
Hello. I was doing a
Yes.
recap, and I was saying that tax evasion and tax avoidance are as a result of the high tax rates. We evade not to pay what we are supposed to pay. We avoid not to pay anything. So evasion is a legal process. Avoidance is illegal. That's the difference between the two. So if you evade, it means you are capitalizing on certain existing loopholes, the shortcomings. That's why you are paying what you are not supposed to pay. So we looked at those loopholes: concealment of true ownership, lack of information gap, inappropriate tax laws, and the like. So we went ahead and now looked at how do we mitigate this. And as we looked at the mitigation, I asked that you keenly follow and look at what is it that the Kenya government has put in place so that to curb these loopholes for tax evasion. I said you can discuss that in groups, then you can consult. There's only one group that has been looking for me to consult about taxation. And we concluded by looking at calculation of the income tax. How do we calculate? To calculate income tax, we must establish the gross income, the total earnings. Then out of the total earnings, we subtract contribution to registered schemes like pension schemes if it's registered with the Commission of Income Tax. So as we do that, we get what we call taxable pay. So it is this taxable pay that we subject to the tax on the basis of the given tax brackets. So we tax the whole of it. So the total tax that we get out of taxing the whole taxable pay, that gives us what somebody is supposed to pay. But you are entitled to a relief. A relief is a discount. Mostly, they normally give personal relief. So when they give personal relief, it's a discount. So you subtract out the tax liability, what that person actually pays. And for you now to get what is due to you, you subtract the gross income minus all deductions. And these deductions must include the tax. These deductions must include the pension and those statutory deductions, plus all other deductions that an individual may make. That gives you a net value, which we call the net pay of the take-home package. That is where we stopped. We looked at an example. I gave you another one, and you also gave you an exercise, which you have to look at. Today, as we start, I want to proceed and look at a concept of investment, a concept of the stock market. Why is it that in every country we must have a stock market? Kenya, we have. It has evolved, or stock market, Nairobi Stock Exchange, or securities market, whatever that you call it, this is what we refer to as a stock market. It is a very important concept in any country because it provides an opportunity where people can buy and sell shares, government securities, and stocks of municipal authorities. So it's an opportunity for us to invest. We are going to see in this lecture something to do with investment, what investment is all about, and how can we invest. Why? Because man shall never be satisfied with what he or she is doing. Me, I'm a lecturer, but the salary I earn is not adequate to meet my needs. So I must have hustles. How do we have hustles that can give us at least something to make our life going smoothly? So such a market where investors can buy and or sell shares and other securities is what we refer to as the stock market. So looking at the stock market, then we are defining shares. We are defining stocks. We are defining bonds, and other securities. So in this market, where we are buying and selling stocks, bonds, shares, then this is what we are referring to as a stock market. In the stock market, we want to deal with the concept and issue of shares. A share is a unit of owner's capital. What is it that you are putting in as far as you are concerned? Now, if we are saying that one share is 10 shillings, so we are saying that that is the unit, 10 shillings is the unit, and that's what we are referring to as a share. So if you put in 100 shillings, then you are putting in 10 shares. So a share is that smallest unit of the owner's capital. So if the smallest unit is 10 bob, that is the share. You have 100, you'll have 10 shares. You have 1,000 shillings in put, you'll have 100 shares. That's what it is. But now, the minimum of shares that are allowable, that bundle of the minimum shares, is what gives us a stock. So a group of stocks, of shares, gives us a stock. And this is what comes up as a result of something that is fully paid up. So if we are buying 100 shilling shares at 10 bob, that gives us 10 shares. So that 10 shares, that's what gives us the stock. So I have a stock of 10, meaning I have 10 shares. So as we want to see this form of investment, we want to talk about the smallest share, the owners of capital, the share, that those who actually provide, that which is provided is what we may categorize as owners or ordinary shares. There are those who would just provide their money for business purposes. Those are called preference shares. So ordinary shares are owned by ordinary shareholders. These are the real owners of the investment. They can vote. They suffer profits and losses. But on the other hand, those who have only provided their funds for trading purposes, those we are referring to as preference shares, whose owners are preference shareholders, they only provide their funds and they are paid at agreed interest rates. So to them, therefore, because they are only providing their money, they are not entitled to certain rights like voting. For them, they are paid that fixed rate of interest. Whether the investment makes losses or whether the investment makes profits is neither here nor there. That is what we are saying. So as we look at this concept, I want us to look through so that we understand, because it's going to give us an opportunity for us even to invest. But why is it that we must have a stock market? Every country is mandatory. So it means a stock market serves very important. A stock market is important in the growth of a country's economy. How does this work? These are the things that we need to understand, because we want to widen up the discussion so that we do it and do it in a better way. A stock market provides an avenue where people can buy and or sell their shares. It's a trading market. So you can go there buy, you can go there sell. It's the Capital Markets Authority, CMA. It has evolved from Nairobi Stock Exchange market. It provides an avenue for us to spread risks, because we know if you invest in one, then you have more risks. But if you diversify, you invest in several, then you are guarding against the problem of liquidation. Liquidation is when you run insolvent. How will you recover? This is what we need to understand. Every day you watch news, every day you open a newspaper, they are talking about the stock exchange index. Why must we talk about it? Because it serves as a barometer. A barometer is an instrument that we use to measure changes. And this instrument is therefore used to measure the economic progress of the country. So that stock index is important as a measure. And above all, the stock market protects the country against fraud, issues of corruption, issues of fraudulent activities. How does it work? All accounts of those companies that participate in the stock market are supposed to be made public. They are published for public scrutiny. So if you don't publish, as we're going to see, then you risk being registered. So as we look at this, we want to understand, how about the information provided from the stock market? That information provides us with useful statistical data, which helps now the government to evaluate its economic performance. When you see things like inflation, we are going to look at index numbers. When you see they are talking of economic growth, or they are talking of what, there must be basis. The basis of such is stock market. So every country must have a stock market for purposes of these 5 reasons. And for one to participate in the stock market, they must be what we call gain quotation. What are these that we are referring to as quoted? Because those companies that participate are basically quoted companies. So what are the quoted companies? Quoted companies are not just ordinary companies, but they are companies whose shares are dealt with in the stock market. Such are normally public limited companies, those of the government. But private companies, like now, if I have one Wasike and Sons, it may also be allowed as long as it goes public. What does it mean that going public? We allow the general citizens to also participate in the investment. Through what I said, the provision of preference shares, the true owners give ordinary shares. The others provide preference shares. So if I have a company, private company in the name of Wasike and Sons, that's a private entity. We are the true owners, the Wasike and his sons. But we can allow James, John, Patricia to join. They give us their money at agreed interest rates. That's now the preference shares. So that's what it means. So we may wish to look at this, and that quoted companies must provide avenues so that we deal with issues of stocks, which you talked of as a bundle of fully paid up shares. And you talked of a share as the smallest unit of the owner's capital. If we talk of a share as being 10 bob, and we are saying that the minimum we should have is 100 shillings. So it means the stock you have must be of 10. That 10 is the share, the stock. That's what we are saying. That most companies will strive to get quotation. Why do they struggle to gain quotation? It's because the stock market provides an avenue for them to float more shares. And if you float more shares, what happens? By floating more shares, you raise more capital. As simple as that. Is a way of raising money. You use the information that's provided, which I've said on a daily basis, so that you can improve your performance. As we are going to see, quoted companies are well-performing companies only. And if truly you are performing well, then you attract competent personnel into the company. Look at companies like Mumias, Nzoya. I'm looking at the sugar factories. What is happening to them? Look at Safaricom. Look at Airtel. Look at them. How is their management? Suppose we announced for the position of the managing director, Safaricom Limited. Who would do you think will apply? Then suppose we did for Nzoia Sugar Company, the one that is on its knees. So performance is key because it helps attract competent personnel. And by participating in the stock market, you will know your true value of your shares in the market. These are issues. And when you know your true shares in the market and you're performing well, then you'll attract more investors. Look at Kenya, the way things are going. Investors are flying out. Why? Because of high tax rates. Look at when we have political instability. Investors fly out. But when we have a conducive political environment, most investors come in because we are attracting them. We have an environment for them to do business. And generally, kizuri chajiuza. What is the image? If you are well performing, then there you are, your image. People look at you positively. The way I do say, sorry to use this example, the way you dress portrays your image. If you are always in a suit, that's your image. If you are always half naked, that's your image. How you portray yourself. So because these are good performing companies that attract competent personnel, that know their value of their shares in the market, they attract serious investors, then this promotes the image of those companies. But does it always mean that once you are quoted, you will never ever be removed from the list of quoted companies? As we look at this, those advantages of quotation, there are also disadvantages of quotation. These disadvantages may also be construed to be circumstances under which you may be removed from the stock market. So under what circumstances may you be removed from the stock market? What is the disadvantage to that? That you risk being deregistered if you have a poor performance record. So when you have a poor performance record, you are deregistered. Why? Because quoted companies are well-performing companies only. We talked of things to improve performance, to attract competent personnel, to about its image, your value of the share. So if you don't, then you risk being deregistered if you have a poor performance record. Now, another disadvantage of quoted companies is that it's expensive to obtain quotation. Before you are quoted, you must pay brokerage fees, legal fees, audit fees, and these are normally expensive. So as a circumstance, when you fail to pay the quotation fees, then you risk being registered. You must pay for those fees, the legal fees, the audit fees, the brokerage fees. You fail to pay, you are deregistered. But kindly mute your music. We don't need that music. Kindly mute, please. Now, we have said that for you to be quoted, why we must have the stock market is that we must guard against fraud. We must publish. So when you fail to publish your account, then you are deregistered because that's law. You must. So the disadvantage to this is that you cannot maintain secrets because you are required by law to publish all your accounts. The public scrutiny to your accounts. That is what it is. So if you think of doing underground dubious means, then you may not succeed. Why? Because quoted companies are well-performing companies, those that must publish all their accounts, those that are out for public scrutiny, and the like. Now, the issue of confidence, if creditors lose confidence, then you may go under liquidation. You may not have funds. So under what circumstance will a quoted company be registered? It's when creditors lose confidence in the company. So the disadvantage, when you are put under liquidation, you are under receivership. And that is too bad. It augurs and renders you poor image. But you also have no control over the incoming shareholders, some of whom have a lot of influence. Look at a scenario whereby we are looking for shareholders to be part and parcel of the Mumia Sugar Company. Among them, those who are coming in are one, Raila Amolo Odinga, Uhuru Muigai Kenyatta, Duncan Wasike, and yourself. So we are there for the annual general meeting. And Raila makes a proposal. Ruto opposes. Uhuru supports. Just food for thought. Where do you think the other shareholders will go? What will be the position? You see, the power and the influence of certain individuals is key. And therefore, when they join a company, we have no control over them because they can use their influence to change the company's policies. And that is the biggest undoing. When the company brings in and has influence on the incoming shareholders, then that company may be registered. That is what we are talking about as quoted companies. Allow me to pause at that and ask for any questions before we proceed to look at what this investment thing per se is and what do you invest in. Any question, please, you ask. Good. Let us proceed and now look at investment. What is it that we call investment, ladies and gentlemen? Investment is just commitment of funds for returns in the future. You are committing your funds today in a given venture, expecting returns in the future. You are buying shares and selling those shares. You are buying them because you want to hold and sell them at the right time for you to make an extra shilling. So if we consider investment as a commitment of funds today for returns in the future, then the issue of buying and selling shares is key. But what do you look for in and when buying or selling shares? You must look for the nature of the product. Today, check in the newspaper, listen to the news. We have several categories of projects, of products. We have agriculturals, industrials, finance, banking, alternative investments, those in commercial and allied, name them. We have those categories of products. So what product do you want to invest in? If it's financials, there exist financial limited companies. If it is banking, you know the banks that are there and you check, you'll see them listed in the stock market. There's KCB, there's Equity, there's Cooperative, and name them. Then you look at performance of the company. Performance right from the word go. The way we saw, for you to be quoted, you must be a good performing company. If you fail to perform well, then you are deregistered. How do we measure the performance of the company? We measure it by looking at how much are they giving? How much, how easy is it to convert their shares into cash? How easy is it for you to liquidate? How easy are they for you to transfer? Good performing companies command a high demand. But if they are poor performing companies, then there's a problem. So the way they perform. Performance can be looked at also in terms of how much dividends do they give. If they are consistently giving an increased dividend level, then those are better performing companies. If not, then those are poor performing companies. How about the issue of diversification? We are told that we should not carry all our eggs in one basket. There is need for us to buy shares in different companies. We saw the issue of risks. How do we spread risks? We spread risks by investing in different companies. Those assets, not only agriculturals or industrials or financials or banking or alternative market or commercial and allied. No, you must have one in agriculture, another one in finance, another one in banking, another one in industrial. That is what diversity is all about. Because as we buy shares in different companies, we are not only spreading risks, but we have a wide product mix. If we have economic recession and the performance in finance goes down, or banking for that matter, then you have the industrials coming in. If we have harsh economic harsh economic environment, and there's drought or El Nino for that matter, to an extent that all the agricultural products are destroyed, you should survive from the industrials and alternative markets. That's why we talk about a wide product mix. Don't carry all your eggs in one basket. Then we look at the company's growth rate. What do we mean? Look at a company whose growth rate is favorable, that is declaring dividends that are increasing over time. If we declared a 1 shilling dividend, next year we should declare 1 shilling and 50 cents, the following year, 2 shillings, like that. That is what growth is all about. So a company that exhibits a consistent growth rate, that is a better performing company. And of course, issues of security of investment. That we should invest in guaranteed securities, such as those of the government. You are guaranteed you will never lose once you invest with the government. But if you invest with any other, my brother, you may stand to lose. So, as we have looked at investment, the way I say, this is commitment of funds for returns in the future. What do we generally look for? Not only now in stocks, but generally under investment. For us to invest, we have 5 or 6 factors to consider. One is the return, that we must invest in areas that have high returns. And when we talk about returns, we are looking at interests, profits, dividends, and what have you. Because the higher the returns, the better the investment. All of us want to make returns, not losses, profits. So where we go and have higher profits, that's where to invest in. Security of investment. That we must invest where there are fewer or minimum risks. We know risks are everywhere, but we look for where do we invest? There are risks, but this risk should be at bare minimum. Do we need? Why are you paying fees? Aren't you not taking risks? Why are you doing a degree? You are taking risks. But the level of risks that you are taking seem to be better and seem to be well off. Now, the degree of investment, the degree of liquidity, how easy is it to convert that investment into cash? Suppose something happens, are you able to dispose it off and have cash? Ordinarily, for a viable investment, we must invest where it's conveniently easy for you to convert that investment into cash. How easy is it for you if you have a vehicle? How easy is it for you to dispose it off and have cash? That's what we call the degree of liquidity. If you buy a phone, how easy is it to dispose of that phone, to have it cash? That's what you must consider. Ordinarily, you must go in for those investments that are conveniently easy, ready to be converted into cash. How about the payback period? When you talk of payback period, how long does it take for one to get back the initial capital invested? You have invested 50,000. How long will you take for you to get back your 50,000? That's what we refer to as the payback period. Naturally, we wish to go to those investments that gives us a shorter period to get back what we initially invested. So if I've invested 50,000, then I should be able to get back my 50,000 within the shortest time possible, not to take 5 years, but should take at most 5 months. So we must invest in areas that are conveniently easy and conveniently take a short period to get back what we had initially invested in. How about the issues of the tax policy? You've seen taxation. So we must pay tax. Lazima tulipe ushuru. Lazima tulipe kodi. So as the rule of thumb, we must invest in areas whose profits are tax-free or have a lower tax rate, because we must pay. So we must pay, but a lower tax rate. We must pay, but pay less, not to evade and not to avoid. Then how about the growth rate? How about the growth rate? Growth rate is just appreciation. So how are our funds value appreciating? That we must go for those areas that funds value will appreciate, not depreciate. So if we look at the fund value, is it increasing, growing, or is it reducing? When it reduces, that's when we talk of depreciation. So this is something that we are discussing and something that we are looking at. Ladies and gentlemen, I want us to look at this and apply it to ourselves. Suppose you are given something, then how will you therefore invest? Are you able to see my screen? Look at my screen. There is something to jog your minds. Mr. XYZ has been retrenched from his job and is given 3 million shillings as a lump sum. And this person intends to venture into business. He wants to go into matatu business, buy shares, or build rental houses in an upcoming town. He approaches you with your classmates to advise him on which option he should invest in. Discuss and advise Mr. XYZ on what he should invest in. This is the question. I wish to hear the comments. That we have three options. One is a matatu business, and let me now simplify it further. This matatu business, we want to call it 4K matatu business, meaning Kisii, Kisumu, Kakamega, Kitale. That is the route. I repeat, the route is Kisumu, Kisii, Kisumu, Kakamega, Kitale. That's the route we want to apply for our matatu business. Then in terms of buying shares, I want to buy shares from Safaricom Kenya Limited, a good performing company. And now in terms of building rental houses, I have a plot around Kibabi University Gate. I want to put up hostels. So what are you going to advise me? Should I go to the matatu business, the 4K circle? Should I go for Safaricom shares? Or should I go for the rental business? I have a plot around Kibabi. Can I use the 3 million to put up student hostels? Kazi kwenu. I want answers. What would you advise me to invest in and why? Unmute, then you speak. We want to hear your arguments.
Should make rental houses.
You speak, Priska?
Rental
Priska Wanyama?
houses. Repeat rental houses.
Why rental houses?
Rental houses around Kibabi.
We listen to each other. If I've not asked you to talk, please, and don't unmute. Somebody saying rental houses. Can you support your argument for rental houses?
Rental houses.
Who is speaking?
No, sir.
Who is speaking? I had picked on Priska.
I'm here, sir.
Then there is ready market.
Ready market.
Yes.
Lucy?
May I say that we should build hospitals?
You speak up, please. We want to hear you.
I think that
We should.
We should build hostels.
I go for hostels.
Always there.
Disantu, Ryle? Emmanuel Owen?
Okay, I
Should build rent.
it's Disanto. I'll
Yes.
say buy shares from the Safaricom because it's a high performance company
Yes.
and you'll be assured
Build
of
rent.
high capital at the end of the day. Yeah. So buy shares from Safaricom company.
Good. Timothy?
Okay. I will prefer to build rentals because I know that after building the rentals, it is automatic that it is occupied and therefore I should start.
Rental houses.
I want you to challenge each other. I don't want to guide the discussion. Eric Shikuku? Or Tobias?
As for me,
Who is speaking? It's not clear. Tobias? Tobias? I have 18 people who have raised their hand. Joseph?
Okay.
Ogile?
Yes, for me, I would prefer buying shares from Safaricom.
Yes.
This because there's moderate risk. When
Moderate
the moderator
risk.
reward. Yeah.
Could you share more about the risk?
Yeah, I can go on and share about the risks.
Share with us. Share with us. Explain to us the risks involved.
Okay, the return depends on the performance of the chosen company and the market conditions. It's generally less risky than the matatu business, but potentially less profitable in the short term. Yeah.
For matatu business is less profitable.
Yeah.
In the short term.
Yes.
Si from the Dobin unaiweka kwa barabara kutoka Kisumu, Kisii kufika Kitale, una elfu zako 10 in a day. Na Safaricom,
Hello,
think
mwalimu.
about it. EDS stroke 0315.
According to me, I will advise you to go for rental houses because there's high demand around.
There is high demand. Wilson Dungu.
To me,
Wilson Dungu.
yes, sir. To me, I prefer the rental houses because when you compare rental houses and Matatu costs of operation, you will find that in Matatu you will have high expenses than building rent houses where the costs of expenses are not high.
That is good. Ian.
Okay. According to me,
Please, when you have talked, you mute. Ian.
okay. According to me, I'll advise you to buy shares from Safaricom. The reason being, if you compare the rentals, 90% of people in Kenya don't stay in rentals. But according to Safaricom companies, 90% of people in Kenya depend on Safaricom shares. And as you compare matatus, these matatus, they have many risks. They need fuel, they need repair every weekend or after a short period of time. So it is high costly.
A good explanation. Philip Kipsang. Philip Kipsang.
Hello, sir.
Yes, I'm waiting for Kipsang. Bonche.
Yes.
Hello, sir.
For me.
Yes.
Hello.
Yes,
For
Bonche.
me,
Is that Bonche or Philip?
Bonche.
The Bonches, proceed.
For me, I'd say the Matatu company, Matatu sector, because the Matatu sector, you'd get at least 4,000 per day as profit. While you ukiinvest kwa Safaricom utapata like it's compounded annually at an interest rate of 10% per annum. That gives you at around 300,000 per year. Ukikompare na nini matatu yenye inakupea 4,000 kila siku, much money than Safaricom or rental houses. Na rental houses ziko seasonal, hawezi jua time ya market. Wanafunzi wakienda nyumbani, hautapata profit yoyote.
That is your argument. We can listen to alikuwa nani? McDonald?
Yes, mimi mwalimu, what I can advise is that you go for matatu.
Why matatu?
Simply because people are always traveling. And that one, you are assured of a ready market. Na matatu, it will give you more profit compared to rental houses and Safaricom shares.
Okay. Canada Risa?
For me, I will choose matatu.
Yes.
Because you can increase the fare anytime and you are sure of getting the money at the end of the day.
Umepotea?
Yes.
I'm here.
Dorcas Wafula?
For me, I advise the man to invest by buying shares. This because based on payback period.
When you buy shares, the payback period is shorter or longer?
Payback period is shorter because as you invest today, the profit or interest counts by than by building
Yes.
maybe rentals, on which rentals will take long.
Okay, that's your good opinion. Damaris?
Sir, this is some.
Damaris?
Hello.
Yvonne? Please, if you have talked, you put down your hand. Yvonne? Samuel, okay, you talked. Dennis Odhiambo.
Hello, sir. Hello. Hello. Hello.
Dennis Odhiambo.
To me, I advise them to invest in Matatu.
Because we go for Matatu?
Yeah. The man
na katika tukupate vizuri.
Hello, sir.
Na katika.
Hello, sir.
My namesake Duncan Osama. Duncan Osama.
I'll first ask Mr. XY Z if you want to invest either on short term, long term, or is ready to take risks.
Oh, it's you are the expert, so he has come to you for advice. And he has made up a mind he wants to join any of the three. What will you advise him to go for and why?
Okay, as for me,
yes,
I would want him to go for rentals.
Rentals. Why rentals?
When he works on rentals, he has a long-term investment, which
yeah.
Hello, sir.
Sir.
Who wants to speak? Masinde
Hello.
Haron? I can give you ample time to speak, all of you. We want to get to understand the gist. In fact, mtaleta swali kwa hii wa Mwakenya washindwe. Mtaleta swali, it's such a question. 20 marks.
Oi.
I'm Kipsang.
Kipsang ndio umeamuka. Haya, Kipsang ongea.
Okay, thank you. According to me, I may advise you for Matatu business.
Yes.
This Matatu business, it's also have pros and cons. But if you look at its pros, it can generate daily income.
Yes.
High demand for public transport in urban areas, as those 4K towns that you have mentioned. So
yes,
you just be receiving a daily income. Thus, that will enable you to have cash flow during the day. But if you want a longer investment,
yes,
I may also advise you to go for rent, as this rent, rental property for long-term income. But however, it will just depend on the performance of those urban centers or those places that you have just cited that you will build your rentals. Yeah, that's all.
Okay. Huyu Priska tulimuita akakataa kuongea, sasa mkono iko juu. We cannot go back to you because we have many people who still want to talk.
Hello.
Who want to contribute? Haron?
Hello.
So I prefer going for rental license.
Yes.
Because since you have a plot and a plot is a fixed asset, and being a fixed asset, it appreciates in value.
Yes.
So in case you set up rental houses, then for some time, maybe you want to change to another business, you sell the plot at a higher price than you bought it or you purchased. And talking of business is a fixed asset, yes, but it depreciates with time. So if I after
So
some
for
time,
you, I've brought in the issue of depreciation and appreciation. That's the growth rate. Yes, very good. Naftali?
Yeah.
Okay, hello, sir.
Yes.
For me, I prefer rentals because matatu we have the high cost of matatu. So you must have insurance, license, the fuel cost, and also paying the drivers. That is a lot of cost.
Now I just want two people who want to talk. Only two.
Hello.
Yes, speak.
Hello. Hello, sir.
Story.
Hello, sir.
Yes, who is speaking? Speak.
Hello.
Who
Hello,
wants to
sir.
speak? Don't just say hello, speak.
For me, I prefer Mr. XYZ to venture into buying shares. This is
Yes,
because
why do you want to buy shares?
this is holders can share.
But so the decision should be based on risk.
Those ladies who are talking, please kindly unmute. I can see you from my side. I don't want to name your names.
Hello, sir.
Speaking, proceed.
Hello, sir.
For me,
You protege. Continue. Humphrey?
Okay. For me, yes. Hello.
Once your time
Yes,
has
sir.
gone, don't start talking when I've picked another one. Kiprotich, your turn is over. We are on Humphrey.
Yes. Hello.
Yes, Humphrey.
For me, I'd like to convince him to take a matatu, because when you look at the profit, matatu will produce the profit every day, whereby you can use the profit and invest it in another job, such as rentals. So rentals will further bring another capital, and therefore it will be good.
Okay, Kiprotich, I'll give you the last warning. Timothy,
Hello.
can you unmute?
Okay.
Kiprotich. Timothy.
Yes. Hello. For me, I will
Kiprotich,
advise.
unmute, or I deal with you. Good.
Hello, sir.
After you talked, I'll not give you another chance.
Hello, sir.
Who is that?
David, sir.
David.
David.
Yes.
So my opinion is
Some of you are now taking me for a ride. Do you want to talk? I give you a chance. Na unaanza kuongea vitu yako. Amos Nguran.
Yes, sir.
Yes, your hand is up.
Rental houses.
Why rental houses?
Because it's durable and one can earn from there in a long period of time.
Good.
Unlike the matatu, which is costly in repairing continually.
That's okay, Hagai.
Okay, sir. I want to second what Ian suggested earlier.
Yes.
Yes, because when you compare building rental houses and the buying of shares, due to high rate of technology,
yes,
I wish Mr. XYZ should buy shares.
You should go for Safaricom shares. Why?
Yes, Safaricom is more secure.
Ukitaka kujielmute na network.
And if you compare with the building rental houses, it also depends with the area.
This is on the other side, the matatus are more costly. Hizo zitakimbia tu kwa barabara, miaka 3 zimeharibika.
Aga, express yourself in the language of instruction.
Hello, sir.
Unaandika kwa mtihani.
Hello, sir.
Safaricom is more secure.
What age, Richard?
Yes. For me, I advise this person to go for rental and like the others.
Yes.
Because when you look at sometimes shares, they may depreciate values depending on the market. And like rentals,
yes,
rentals will appreciate for every year, and you are sure about
rentals that will appreciate, unlike others that will depreciate.
And you are sure about the monthly rent. You'll be earning every month. But when you look at the matatu sector,
yes,
a little bit much expensive since accident can occur anytime and you will be required to repair. You are also supposed to go for insurance cover for that matatu, which might be a little bit expensive.
Okay. Now, members, Tobias Nyongesa, I see umeingia kwa fujo. Then Lavender can conclude.
I would advise XYZ to venture into buying shares.
Shares, yes.
Because shareholders can receive dividends which are portion of company's profit. And
Yes.
also investors can easily buy and sell shares at a market price.
Uh-huh.
Are living.
Okay, who did I choose to be the last one?
Me.
The BCR group amutaki kuparticipate na nyinyi ndio mtakuwa na shida huko mbele.
Me, sir, I would like to participate in this.
Speak. I said Anna Lavender to conclude.
Okay, yes. Thank you for this opportunity. I would
Anna
like
Lavender.
I will advise them to build because rental houses can be an attractive investment because they provide a steady income and potential for long-term growth.
So Lavender will go for?
Will go for a loss. Mimi naweza nikaagi mpaka tu watu wasema wasichana kweli hata atumia akili.
Okay, because you are a lady, so we don't nini.
Sisi ilikuwa in that by the way unasemanga factors to consider before settling a business na to the security, so atakuwa amesha consider amejisema place. But in case of natural calamities, for example, zikuje zivunje nyumba ianguke chini, okay, you will have insured that house against such kind of risk. So you will end up ending up with if this car an accident, the process of being beneficiary, even if you have gotten an insurance cover, the accident would have occurred by itself. What if the driver led to the occurrence of the risk? So the person will not be compensated and it will lead to a loss. But when you have just buy shares, it is Safaricom is a growing company that grows daily. So if you online classes, we are using Safaricom data, they are just earning. And we'll just get Nuna vile Ruto ameomoka mtajikuta has born.
Okay. We don't want to talk about Ruto, we want to talk about ourselves.
Yes, sir. May I conclude?
Now, I want us to rethink about the three. Commitment of funds for returns in the future. Think of which of those investments will give you higher returns and justify why. Think of those investments. Which one has fewer or minimum risks? All of them have risks.
Yeah, Safaricom.
Invest in Safaricom,
Hackers.
they might go low in value. You invest in hostels, you may like those to stay there. You invest in Matatu business, it has a crash the following day. But now, which one has fewer risks? Because everybody has risks. Degree of liquidity, which one can you conveniently dispose of when there is time of need? Look at the payback period. Which one takes a shorter period of time to pay back your initial capital? Is it the Matatu business?
Yes, sir.
Is it the Safaricom? Is it the rentals? Now look at the taxes involved and the taxes imposed on profits. Which one is tax-free or has a lower tax rate? Then in terms of growth rate, look at which of the three investments will have the funds value appreciate. The choice is yours. In your groups, go and now discuss on the basis of what I've highlighted. Which one has a high return rate? Which one has fewer minimum risks? Argue it out. Which one has a higher degree of liquidity? Which one has a lower payback period? Which one has tax-free profits or lower tax rates? Which one has appreciates in value? Those are the things I wish that are discussed. You justify why it's Matatu business or rental houses or shares. That is how to argue and that is how to respond to that. So you must give with factual and be very specific and particular to what you will be looking at. Thank you so much. I wish that we had joined today's lecture. Next week, as I said, we shall have a cut. And the cut will be done from 8 a.m. online. I have announced next week we shall not have the lecture, but we shall have a cut 1. Please prepare. Mniongee na mnaongea alafu mtafanya vitu zenu, mtu asikuja aseme alimisi. I've announced a cut 1 next Thursday, 8 a.m. online. That's none of my business. You have a whole week to ensure that you can access the portal. Don't tell me that. I will not entertain an excuse. You miss the cut, you score 0. Thank you so much. Our lecture for today is adjourned.
Income tax
next week for the question. And the following week for the index numbers. Then we will be looking at the last.
Thank you, lecturer.
Thank you so much.
Excuse me, lecturer. Thank you, lecturer.
Thank you, lecturer.
Thank you so much.
Thank you, lecturer.